Everybody, don't forget to turn off your music.
Yeah, I'm doing that now.
Perfect. Don't forget, everybody, futures or trading, any kind of trading, really, financial products contains risk, and only risk capital should be used. We've seen some big drops in the market. We've seen some big drops in crypto. Don't trade with money that you can't afford to lose. You can't afford to risk. Okay, it's very, very important. So with that being said, let's move on and let's get to our daily chart. Or let's go to the weekly first. After we take a overview of the 5-minute chart.
Yeah, we always talk about the bigger charts. I really like when I show up to my charts, take the 5-minute, look at what I see on my normal chart, and then just scrunch it a little bit. So over the last day, last night, that's a really clear picture. A lot more than what it was if you only have the last couple hours of price action. You might be thinking, well, we should be going up this morning. We made a low, and we have a higher low, and we have a high at the key level. But when you shrink your 5-minute, before you even go to other charts, you start to realize the longer term sentiment is down. A big telltale of that is that our 200 EMA in white and our 89, or a lot of people use the 90 in blue, are very, very separated. What that tells me is this market's been running down pretty steep for a good amount of time. You could say the same about the 21 being that far from the 89, the 21, the thick gold one. So all of these EMAs not only being in order, but being separated by 30, 40, I can't count the points right now, lots of room there, tells me that this market has been running down. And if I wanted to shrink my charts more, you could show that. But even just that little bit tells me that we've been going, and there it is. Yep. There's our almost unrealistic down move. There are retracements there, but very, very shallow. For a very long time, we rode right on the 21 and 10 till it gave out.
Correct. And let's also remember that we're not trying to predict where we think the price is going to go today. That's not our goal. Our goal is to have a plan for when the price goes there. So if the price goes up, we have a plan. If the price goes down, we have a plan. And if the price chops, so if it just goes back and forth and is just choppy, we can't find a direction. We have a plan to do that too. So again, we're not trying to predict which way we think the price is going to go. We just want to have a plan for when it goes there.
Agreed.
Very important. Very important.
Different way of saying that is to identify ahead of time from which situations I will have an advantage. If the market goes down, I have an advantage in a trade. A good trade might happen at A, B, and C. If the market goes up, I'll have an advantage after maybe you break a key level, retrace back to it, whatever it might be. We'll go through that. But really pinpointing ahead of time, doing your thinking ahead of time to say, if this happens, this is when I want to trade. And like Rob said, we could have a plan for a chop, but your plan might be, hey, there's no trend. I'm going to go cut the grass or something like that. Just take a break from trading for a bit.
Or I'm going to practice trading in a range. Mm-hmm. Go on your simulator and say, hey, you know what? I want to practice, taking the trade. I draw a rectangle around the chop zone. And I say, when the price gets to the top, I'm going to go short. When the price gets to the bottom, I'm going to go long. And if the price is in the middle, I'm going to stay out. And you can practice trading that chop. So there's always something you can do. But when we start trading with live money, that's when you want to have you want to have your plan and be confident in your decisions. If you're not confident in your decisions, because a lot of times you didn't have a plan, trading's going to be pretty difficult. It's going to be pretty difficult for you. So.
Agreed. And one of the points I wanted to make was, for me, sometimes I get caught up almost forcing trades on days that I shouldn't, where I'll give back more than I should during a week, knowing that 3 days were the perfect trend, the perfect trades, and on Thursday, maybe there's a really choppy day and I just start forcing more trades than I should. So I do think it's very important to be aware of your zone and know when you shouldn't try and force those trades, or what is your zone. So I'm not saying don't trade chop. I'm saying if it is your zone, know that and know how you're going to trade it ahead of time. Don't get caught up trying to force something that might not be there on a day that isn't what you want it to be.
Yep.
So
cool.
Daily.
Let's look at the weekly real quick. We'll go to your daily chart, and then let's just pull up a weekly, just so we can kind of get an overview of what's been happening over the last 6, 7, 8 weeks.
So there's the last couple of years of unreasonably up weeks in case.
Yeah.
So this pullback, as scary as it is, if it were a 5-minute chart, wouldn't seem unusual, if you will. It's kind of a needed pullback on a market that's overextended to the top side, it seems like, for whatever reason. So I do have a lot of levels when we look at the weekly, but
seven in a row.
Tells me what the sentiment is.
Yep. And we thought maybe on Monday, didn't we? We thought maybe on Monday that this price might want to turn around because that candle was green. And we thought, okay, maybe this will be our first green candle. We didn't predict that the price was going to go up, but we said, hey, look, if this gets above 4,100, which it never did it? It never got above 4,100. We literally on Monday, we said, if this gets above 4,100, now we might look to go long. Guess what?
Yeah.
Didn't get above it. So it hit that level right there that you have at the bottom and said,
That
nope.
40.90 right at the bottom. We'll talk about that on the daily. Go ahead.
Yep. Perfect.
Yeah, you're exactly right. If it got above there, it shows a little strength to the upside, but all it did was come back and retest a level very similar to what we just looked at on the 5 minute. So the market came back, retested that level, and ran down a significant portion. And that was a level we talked about ahead of time and asked our members and everybody who was watching to draw on their charts. So it's not something we made for the presentation to look back in time and say, oh, if you had seen this. No, we did see the level and we're talking about it. I wrote a blog about it. It's in a blog. The same level is in a blog telling people to draw it on their charts with the exact numbers of that level. And I don't mean to me. It's just like sometimes I feel like when somebody's presenting, it's like, wow, that's too perfect. Are you sure it actually did that? Or are you just trying to blow smoke at me, if you will? Like, yeah, that looks cool, but there's no way it's that clean. Like, there's no way you had that level and it went almost to the quarter tick and you're looking on a daily chart and it's like, yeah. It happens sometimes. You can't expect it every time, but it starts to tell you your levels are where they should be, and that's something that I've really learned to trust over time is the support and resistance levels, and knowing when to trust them, I think, is one of the most important things, or maybe being able to line up confluence, not fight the trend. I think the most common thought is if I have a support level on the bottom, then I have to go long when the market hits that level because that's my support level, so I just have to jump in long. And it sounds kind of funny to somebody who might have been trading these levels, but it's not because people think support, well, that's your support level. So you have to get in and go long there, right? It's like, well, a really good downtrend is just as likely to break through that level. So I need to know when might I trade that? In a perfect world, maybe you see it hit that support level, break through, retest what was support as resistance, and that's the trade we look for. We actually just showed that on the 5 minute before it heads down. And in that way, you're using a key level in conjunction with the trend instead of having to ask yourself which is stronger, the trend or the key level. It's like both of those can be very strong assets. Why put them to war against each other? Let's just circle them in together and let them work together in the direction of the trend. So I think that's a big learning step that a lot of people go through, me, myself included.
Agreed.
Daily. Sentiment is down. Again, weeks 3, 4, 5, 6, 7 in a row down. So we are stretched to the bottom side. We might hit key levels, but
there's no reason to think that it
has to go up.
It has to go up, okay? That's one of the big fallacies in trading that people think, oh, the price has to go up. The indexes, the futures are built to go up, and they are. But we have to trade what the charts tell us, not what we think the price is going to do. And I think there's too many people that want to try and predict where the price is going to go versus just trading what they see, not what they think.
I agree. And I think part of that is thinking, well, if it does turn around at the bottom, then my headroom is like 1,000 points because for 6 weeks we've been going down. And you think about that from the outside perspective, you're like, for 7 weeks we've been going down, and you're assuming that the 8th week just has to go up instead of down. It sounds kind of ridiculous when you put it that way. It's like it just has to go up, doesn't it? But 7 in a row are down. But so that's where.
Just think if you tried to go up at the 5th week or the 6th week.
Yeah,
now we're in the 7th week, and now you've busted your account. Now you got no money left to trade. Instead of just trading what you saw and let the charts. I mean, again, I like to use the O word, right? The O word, obvious. Let's look for things that are obvious. That's what the market does. That's what the algorithms do. They don't try and trade, things that are an anomaly. They really don't. They want to all work together. They don't want that one algorithm that's not working with the market.
I think that's a common temptation that I had as well. Wanting to see the things that nobody else can see. Wait till I find this thing that only the multi-bazillionaires use and nobody else is going to know, but I'm going to go find it. And you start digging in with this like 10x magnifying glass to try and figure out everything. And then you start listening to all the people who respectfully are the bazillionaire traders. And they're all like, well, just trade with the trend, clear your stops, trade in the direction. And you're like, well, that's what I heard in the first 2 weeks. There's no way that that's what I'm supposed to do. Like, what are the secrets here? And
what's a golden handshake?
Right. And it's like, And then you hear the successful trader, you ask, I know one was asked the other day, I believe it was Pax, but they asked him, what's the best way to trade? He says, whatever your style is. Anthony
Yeah.
Crudele says the same thing.
Yeah.
Whatever you can prove to yourself. When I heard that early on, it's like, what do you mean? Why can't you just tell me what to do? But it's a little different than hammering a nail into a board or something
Yeah.
that is very, very standardly repeatable. Trading, everybody can be taught the same thing, will still trade differently because no two trades are exactly the same as far as the factors that go into them.
Yeah, and by the way, speaking of Anthony Crudele, Deli will be in session June 27th here at FNL for about an hour and a half or so. So,
Awesome.
if you're not a member, go ahead and send an email to info@futuresnetworks.com. We'll get you a pass for that session. You can come in and he's going to be answering questions from our members. So really great guy, host of the Futures radio show. Go check him out on YouTube. Really neat dude. So, yep. So here we go. On the daily, we did make a lower low on the most recent price action. We have not made a lower low on last week's low yet. We equaled it last night, and you can see there are those two wicks. So that's my key level on the bottom. I think it's pretty obvious, right? Pretty obvious to me that once we break that, that's going to be our, okay, now we've got 100 points to run down from there. And as we go through our charts, we're going to start defining it a little bit more, but we can start putting some key levels on our chart. And I would say the first one that folks would want to put is that one at 38.55. So that would be your key level on the bottom. I would not be super stoked about getting short until we get below that. Once we get below that, now we've got a lot of room to run. So that would be my key level on the bottom.
I like it. In a sense, I still see a good retracement in a downtrend, so you even could use that as headroom if you wanted to, just knowing it's a key level that we've been pushing down and say, if I'm short, maybe I want to fill before that area because we pushed up from there twice. Yep. So there's two different ways to look at that, but knowing that the key level is there can help either one. I know that if I get in short, I don't want my fill to be under that area because twice we pushed up from there very, very cleanly on separate days, which tells me that's a pretty strong level for one reason or another. It doesn't tell me I have to jump in long. What it tells me is that in this downtrend, I probably don't want to fight that temptation in order to have a higher percentage trade. But I have to keep in mind, trends break key levels in the direction of the trend.
So, and what I was saying basically is I'm not looking for a huge trade until I get below that level. So I'll be looking to grind my 12.8s, my 10.5s, those type of trades. I'll be looking to grind those really until I get below that level. Once I get below that level, now I might look for one of my bigger trades with a runner, something that I can trail down, because there's a lot of room below that. So I agree 100%, Travis.
Awesome. 240.
No, hold on. Let's draw kind of where we're looking on the top side. So what if the price, based on our daily, if the price goes up? Well, we've got a lot of room for it to go up, to be honest. We really do.
Yeah. I mean, the two levels that I have most close are from a year ago, so a lot of people won't have those same ones on. They are bodies to wicks areas that were clear at the time, but a lot of people aren't looking a year ago for a key level, so I have to keep that in mind. If I'm looking on the top side of where we're at, the top of the last turnaround's 40.90 at that same daily level.
I would probably start looking. You actually have it. I would probably start looking somewhere around 39.70 or so. Yeah. And we'll see that on the smaller charts somewhere around there. That when I get above that level, that's where I'm really confident to go long. Until I get to there, I might just be in a move down. So I'm kind of looking at that level, 39.70 or so, and we'll see that when we get to our smaller charts. There's another level before that, probably right in here, and you have it actually, that once we break that, now I might look at going long, but that 39.70 I think is going to be my biggest level that I'll look at to go long. And then as we move forward in these charts, we're going to see what our chop zone is, where we kind of want to stay out of the price action. So let's go ahead and go to our 240 now. Okay, we're below the channel. We just hit the main channel. We just hit the 100% blow off on your channel at the bottom, right there. Yep. So again, we're kind of at this bottom of this level that if we break through this, holy mackerel, folks, look out below. We had the same type of scenario yesterday that once we broke a level, that we were we were looking at 100, and you even talked about a 200-point run yesterday would not like shock you. And sure enough, we had almost a 200-point run yesterday from, well, early in the morning, but not from opening bell was about 100 points. So
Yeah, it happened that way too, and we didn't record our session yesterday morning. We talked about why, but it was pretty cool. So I remember us talking about that. 100, 200-point run down wouldn't be a call to go check the news because it's what the market's showing us would happen. And yesterday was the day that just ran down without a retracement all the way. It's like it feels good. Does that mean you absolutely would have been profitable as a trader? No, it still takes a good strategy.
yeah.
But the larger charts can give a good picture of what might happen. Going back to what you said, you mentioned the channel. First thing I want to talk about is what does this channel tell me on the way down? And I tried to match the red and the pink one as best I could, but you see the pink one was the original one, and I've lost the data actually from the beginning for the red one. You can see it started actually right at the top. I might need a couple more days to show a little better the top of this channel, but you can see we started late March. And then 2, 3 on the bottom side, or on the top side, maybe even 4. The bottom side, you can see support on the same angle. So arguably could have had the channel drawn around mid-April. After that, everything becomes somewhat predictive. So the tops that are turning around, somewhat predictive. Let's go forward to say, what are we looking at right now? Again, thinking the temptation is to stay in the channel or use exactly 100% on either side as a blow off. You can see I have fainter dotted lines there. They're exactly double the channel on either side. So like Rob said, where we've seen support, you can see the faint channel right there. 1, 2, 3, 4, and 5 times now. The fifth being right now is where we're showing a little bit of a turnaround. So what does this overall channel tell me? Well, it tells me we had a deep retracement that if you look where it turned around, literally exactly where it should have 4 candles, 5 candles wide. And I have to think those 5 candles aren't 10 minutes of time. This is a 4-hour chart.
Yeah.
So that's almost a whole day respecting exactly the angle of my channel as it comes back to it over and over. That's a really good sign that it wanted to push down. Everybody who wanted that trade from a larger perspective probably got in if they cleared their stop. And then we saw that big move down. Now that big move down pushed down to the 100% blow off at the bottom. Now what happens? Well, in theory, we have a little bit of support here at the bottom, but we're in a very strong downtrend. So the channel tells me either A, if we push up, likely to retest the bottom of the channel to push down, but we could also just see a little bit of resistance here before the market just crashes through. It's likely to see resistance.
And there's that 39.50 to 39.70 we just talked about on the dailies that the price could turn around that. If the price was going to go, and if it gets above that, then we might consider it. We might see it continue to move up, but that would be a likely spot where you have your level right around 39.70, that blue level right there. That would be a likely spot for the price to possibly come up, turn around, and then go back down and continue in the direction of the trend. So again, we're just trying to get some situational awareness. That's all. Now, if it breaks through that level, now I'm thinking, okay, maybe this is going to run up a little bit and I'll have some more resistance, up here. And then I have some more resistance up here. So I've got some room to go up, folks. If this breaks above this level that Travis has here, 39.60 to 70, if it breaks above that, we do have some room to go up. So again, we're not trying to predict which way we think the price is going to go. We're trying to have a plan for if this does decide to move up. That could be our key level to break that. Now I'm really confident about being long. If I get to turn around at this level, then I'm looking at probably going short. And if it just chops sideways, then guess what? Well, I might want to just stay out. So there you go. Key level, folks, right there. Let's see as we go to our smaller time frames, if this key level is the same, if it works out on the smaller ones too. And that's a lot of times what we'll do is we'll start with the bigger charts, have the key levels, and then we'll transfer those to the smaller charts with those numbers in mind.
So you're saying which one on the smaller chart? This blue one at 39.70 or so?
Yeah, 39.64 to 70 is what you have.
Yeah, it's just that was drawn from a smaller chart, so we'll show how it was drawn then. It's hard to say why you would have that range with just the wicks here, but we can go look at how it was bodies to wicks where it hit on the 10th, and we'll reconfirm that. You can see how it's support.
I don't know. Yeah, we've got support, resistance, support, almost support. So we've got quite a bit of support and resistance in this. So I can see why that would be a good one. All right, 60-minute or hour chart.
starting to get a little more clear. How
Yep.
you can see that level right where it turned around.
So the other thing I can do too, Travis, is what would be on, so remember, we're looking short. What would be the fib retracement on this? What would be a fib retracement back up to here, back up to that level? So now we're incorporating the Fibonacci tool as well as our levels. So we're kind of getting some confirmation on some things, right? So almost about 50%.
Yep, 50 to 618.
Yep. So if this did come back up, turned around up in this area, that would be a nice little spot for a turnaround. If it breaks through it, now we might think that the price might want to run up to maybe 4,000, another 30 points above, because we've got this whole area right here we can make up, right? Nothing really to stop it from going up right there. So anything else you see here that stands out?
That level we talked about, we'll see it again on the 5-minute, but that double tap on the bottom, it's like we ran a long way to hit exactly almost to the same point that we were before.
It was the same point, 55, yeah.
So pretty strong level there on the bottom. It is drawn on the 5-minute. I'll apply it to all my charts when we get there.
Yep. All right, 15. Let's go to the 15. We got about 7 minutes still. And we're also going to be doing opening range, folks. This is a trade that we're practicing. We're not, we're learning more about it as we go. We've talked to a couple people about it, and you're going to see us do it on our simulator. We're not going to be trading opening bell per se. We want to let the price tell us where it wants to go. So myself, I've practiced opening bell. I do fine at it, but honestly, it's not my trade. I want the price tell me where it wants to go, not just jump in a trade at opening bell with emotion. But what we can use is the 30-second opening range. And if anybody wants to go out there and do some due diligence on that, just Google 30-second opening range. What that does is give us the momentum of the market for the first 30 seconds, where all the traders want to go, where all the momentum of the market is. So you'll see us do that. Okay, 15-minute chart. Well, we're starting to get a little more clarity here now, aren't we?
Mm-hmm. Again, our EMAs are pretty separated. The 200, the 89, the 21 just shows that really long down move yesterday. A different way of stating that would be that this could go up a long way and still be in a downtrend. A lot of times I like to use the 200 as the deep retracement mark, right? So the 5-minute, the 200 is going to be a little lower, but on the 15-minute, you could see that this trend could be trusted up a long way from where it's at and still be a downtrend because of how fast the move ran down yesterday. So that's an important thing to note, is don't get too hung up in uptrend because we get a sharp move up that wants to turn around and come back down. Now, might there be a trade there? Sure, but I'm not going to hang on to, I need a 100-point runner in the long direction, knowing that we could have a deep retracement turn around at any point in time and continue a good downtrend that we've had, like we said earlier, for 7 weeks now.
So we're starting to develop our chop zone too right now. I would say our chop zone is really going to be, my initial chop zone is going to be from here to here, right? So if I'm operating in this area, well, my bias is to go short. I would probably go short up here at the top, right? But if we start getting in this area and start chopping, it's going to be tough. You're going to have to trade in a range, long at the bottom, short at the top, right? That's how you're going to have to trade this. Then what's our next level? Well, I think it's pretty obvious. Here's our next level, and then you have the next level at 70. That comes from a bigger chart. So now if I'm going to trade level to level and I am going to go long, well, here's my levels I'm going to trade to. And I'm not going to try and get a 100, 200 point trade going long, try to recover this whole move down. I'm just going to trade level to level. That's it. So that's on the top side. On the bottom side, well, we've got a lot of room to drop on the bottom. I would say we've got 100 points or 50 points. I have 3850 to 3800 will be my next level on the bottom side. So we've got about 50 points, and then I've got around 3700 for that one as well. So easily could see a 100-point drop if we get below this area. If we don't get below that, then we could either be chopping or we might be in a little bit of a move up. Just got to be careful for exactly what Travis said, because this move from there to there, what's that? Ooh, that looks like about a 50% pullback, doesn't it, on this chart?
Right, which isn't unreasonable. Let's see.
It's
I'll
not
go from the
unreasonable at all.
last down all the way to the bottom. There you go. Right at 50, just under that key level.
Yep. So again, it's kind of I mean, folks, I hope this drops. I'm going to have a lot easier time trading short today because my levels are going to be more defined than I am trading long. If this goes long, I'm always going to be wondering, is this going to pull back? Is this going to pull back and resume the direction of the trend? So my bias is short. But I really would like the price action to tell me that it wants to get going short. And that would be to drop below 38.55 or try to take a trade with good position. That would be my other option, to go short. So if anybody else too, Titus or Randy or whoever, if you guys have some thoughts on price action and going long or short, don't hesitate to let us know what you're thinking too. So for me, chop zone is there, basically to there. Anywhere in here, I'm kind of a little hesitant on what to do. 39.20 to 38.60. It's a big zone. I get it, but
even that first one starts to make the first top.
Yeah. Yep. And that's a lot of times what we can do when we talk about when we're drawing our levels. If you go to the blog, we'll talk about drawing the high, the low, and then find the midpoint. And it really works out pretty well here too. Here's the high, here's the low, there's the midpoint.
We got to get to the 5. We got a minute and a half or so.
Okay.
1 minute. So I'm going to go ahead and extend this level on the top. You can look at where these two are from. We just talked about it. The double tap on the bottom of the market is where this bottom box is from. Bodies to wicks on the bottom. The top side, that first range, is the last time we hit a bottom and then turned around as resistance. So what was support became resistance. And we've hit that a couple times as well. So I'm going to apply those to all my charts and extend them forward. Easiest way to do that, double click to get the properties, attach to all charts on the top, and then in time I get a drop down menu to choose on the calendar. I'll just go to about Monday of next week and we'll decide then if I want to keep this level on. But for right now, that's my original drop zone, and then like Rob said, we do have that one just above it up here. We could go ahead and mark that with another rectangle and say if we get up to there, that becomes headroom in another trade, another likely spot to see some resistance. So here we go, 15 seconds. I'm gonna actually swap to my 30-second chart and make sure I have.
And we're swapping to a 30-second chart so we can get the range for the 30-second range, and I'll get that here in a second. There we go. Now we're in our 30-second range candle. And let's see what our bottom is.
I need a bar timer. That's what I'm missing on this chart. It's a bar timer.
So it looks like our top is going to be 3891.75. And our bottom, it looks like, is going to be 3887.25.
We'll see. Yep. That's it.
Yep.
81.75. I know I need one on the bottom.
3887.25 on the bottom. So I'm going to go ahead and put a order in. I'm on the wrong account, of course. So what happens sometimes, folks, when you're doing YouTube and you're trying to go through things, you get a little late on some of your stuff. So I'm going to go long at the top.
I'm in out the top.
Didn't get me in.
Should now.
No.
Pick you back up.
Yeah, I just got to pick me up. I missed it. Dang it. Oh, well.
That's tough.
Yeah, I was busy doing
my first fill. I'm resetting it at the top of the box.
Good job.
So if it comes back down, I'll be about a half point, maybe even a point away from it. I like to get picked up a little above the box on the re-entry. Sometimes it doesn't come all the way back. It comes about a point away. But I can't get too lackadaisical, if you will, on the re-entry because I still want the position from the OB range. So if it never comes back, then we'll just take the gain it gives us, right?
Yep.
So we're watching a 30-second chart. I found that, we just kissed my entry. Do I complain about it? I say that because it's really natural, especially when you're sitting there with live money. You get kissed in a trade like this and it runs in your direction. See, there it would have been about at my second fill now. Kissed my entry point. What do? I mean, maybe I set that as a market order into the future instead of a limit order, but a quarter tick difference, I've already filled on another half my trade. So in this case, we made the right decision. Can't complain too much. Had my order just above the OB range. Literally, you can see the wick came back, kissed my order, and then ran forward again. So what could have been two sets of fills, and there's the third at 9 points. I changed my 10 to 9. I felt like 9 got hit a lot more than 10. So just sample size, I changed my second fill from 10 to 9. So we took 2 gains at 4 and then 1 at 9, and now we have 1 runner left. I'm actually going to move this up a little bit and lock in some profit. We might just do about a point on the top side. Now if it rushes back down, I'm not against getting back into this again from the 30-second range as long as it holds. Because we filled our first trade and scaled out, I will take this level as many times until it stops working. Meaning if I fill this trade 1, 2, 3, 4 times partially before it runs, that's a awesome day. If it ran now, that's cool. If it came straight back through and stopped me out, then it is what it is, but I'll have to try and get back into some momentum somewhere. So as of right now,
what you could do too, Travis, is go to your 5-minute chart and put your range on your 5, because now that we're on the 5, we can almost execute on that if you have your range in there.
So let's do it.
Yeah. So people see that, hey, look, 5-minute chart you can use on a 5-minute chart. It's just when you first get in the trade and you're first doing this 30-second range, opening range, it's a little bit easier to use your 30-second chart. Then you can switch over to your 5 and put your opening range on there.
Agreed. So now I'm going to go template, load. Opening range is coral, 30-second range. You see it there. It's an orange color. And I'm also going to put it into tomorrow. And then I'm going to put it on all of my charts. Ready, set, boom. And now you'll see an orange box. Those are my 30-second ranges. We can zoom in a little bit and look at how that's working. But in this case, everything's said down, and maybe that's part of the emotion up because too many people were hanging on to the down, and a lot of people are stopping out, again, thinking that if I'm short in a trade or I'm trying to sell to the down direction, I have to buy out of that trade. That buy order, it has the same pressure on the market than a buy order would be for somebody going long. So the market, in a sense, is binary, where you're either buying or selling a piece of a larger entity. The market does not care if you're already in a trade or not. So again, the point I'm making is that a trader entering a trade long with a buy order has the same pressure on the market with the same number of contracts as a short trader getting stopped out having to buy out of their trade. So I'm going to move this to the next key level and just squeeze it a little bit. If I get 8 or 10 and it comes back and knocks me out, I'm happy with that. Try to leave it a little bit of breathing room just in case, but I don't really want to stop out break even after it's 15 points in my direction. Even if I only get 7, that's awesome. I left it a little bit of breathing room to see if it'd continue. My stop was 2 points in this case. We took 1 trade, so as long as I get more than 3 or 4 points, awesome. I don't want to let this stop me out even. I will risk not being in this trade if it stops me out, but I will still get back in at the top of the range. So the bigger gap I leave there, the more likely I am to not be back in if I stop out of my runner, if you will.
Yep.
So 91.75 was my entry.
And I think a lot of people too think that, oh, wow, because we have 1 green candle up that we're in an uptrend now. Well, I wouldn't be so, I would just wait. Okay. Let's be a little patient here. Let's make sure that we start breaking some key levels. Let's start operating above the 200 moving average before we start really jumping on along. I want the price to tell me what it wants to do. So far, we're operating above the 30-second opening range. So sure, I feel like, okay, maybe we might be moving up for a little ways today. Can have some targets on the top side to hit, but I'm not just going to sit here and say, okay, we're going long for 100 points today until we start breaking those levels.
Let's do this. I'm going to go to my daily first of all, move my runner out of the way. We've pulled so far down that just if this market wants to be a race car in the up direction, we'll see how far it wants to go. What I'm going to do from there is apply a somewhat loose trailing stop to this in case I end up walking away. If this runs away from me, I want some sort of strategy to be able to capture some of that move. I don't want to give it all back. So what I'm going to do now is apply a trailing stop. Right click on my stop, go to auto trail, and I'm going to do what I said was a loose one. What I mean by that is it's not going to squeeze the market too tight. So 3-step, implying step 1 happens, then step 2, then step 3. Profit triggers will start at 20 points. So 20 points would be 80. Stop loss, let's put it 10 points behind us, about 40, and just leave it there. And then if we go all the way to 40 points positive, let's do the same thing. Leave it about 10 points back, not let it trail. And if I make it to 50, it's a long way up there. Same thing, 10 points back, but I'm going to let it trail that time. Maybe once it's 12 points ahead. Oops, 200, not 2,000. So there we go. When I'm 20 points positive, we'll lock in 10. If I'm 40 points positive, we'll lock in 30. And if I'm 50 points positive, my stop will move to lock in 40 points, but then trail the market as it goes forward. So as I hit OK, you'll see it move up to lock in 10 instead of the 6 that I have. And there it is. So because we're over 20 points positive now, it moved my stop to lock in 10, or 10 points behind the 20 is another way to look at that. And again, I say,
good
go
job.
ahead.
Good job getting in this.
Yeah, thank you. It was an OB range that you did have to be quick on it. It ran once it took off. Like
I didn't get a shot to get in. Unfortunately, it took off and never came back and retested. So I had it in right after I got through, and then I was just a little too late on it, and that happens sometimes. So now what are we looking for, Travis? What are we looking
a trend?
for? Yeah. Does 2 candles up constitute a trend, or is this just momentum?
To me, it's momentum, and seeing that we're barely breaking through the 200 and how separated they are just says it's like a speedy retracement to me. I don't necessarily believe uptrend. Yes, we've made a higher high and a higher low on the morning. So it does put a big wrench in the downtrend as well, now that we've broken through the 200. So that's why the first thing I'm going to look for is confirmation of a trend before I even look for the retracement or the key level. The best way to see that, we either stay above the 200 and retrace back and the EMAs start to line up in that direction. Maybe I look for the first retracement above all of them, or maybe I even wait on a second one and try and get above this top level up here. Either one could be plausible. On the downside, at the minimum, I want to see us break through this last lower low. So if we come back down through just a low here and a retracement does not scream short trade, I want to see us break through and maybe even under that. In a perfect world, we'd even break the lower low at the bottom to give me a lot of confidence in that downtrend. But if we got back under, I guess, the OB range, the key level, and it looked like OB was momentum up with a big wick, then I might start thinking short again with some good turnarounds up until the key level. But overall, this has gotten a little choppy. Now that we broke through all our EMAs up, it's like the trend. That is the first thing I want to see before I even look for a retracement and entry point. I mean, if you're trading the OB range is a little different. But if you're looking for your foundational trade, if you're trying to use that repeatable pattern that we like to preach, then I'm waiting on a trend. And I say we like to preach. That's how I trade. Yeah. I mean, sometimes I think people underestimate, oh, well, you just have all your contracts up together and you're using risk management. And that's what we're told in our first few months. It's like, yeah, but it works. I have a track record that has proven to me without a doubt that respectfully, I respect any trader's opinion, but nobody could walk up to me and tell me I have no idea what I'm talking about as a trader because I've literally spent the time to prove to myself a repeatable zone. One of the things we talked about earlier was if you had a positive day and the same day happened tomorrow, would you take the same trades? Would you be positive? Maybe a little bit differently, but are your rules tight enough that if you're 3 for 4 today and the same market happened tomorrow, would you be close to 3 for 4? Maybe plus or minus a trade.
So would you make the same decisions?
Exactly.
Whether you stopped out or whether you filled on the trade.
And I think that's huge.
That's the tough part. That's the tough part is not caring whether you win or lose a trade, but making the good decision. And that goes all back to being, when you're results oriented, you only care about what happened in the trade when you won. A lot of times in the market, you'll make a good decision and you'll still stop out. That's why we don't look for 100% win rate. 50% win rate is all you need, folks. I mean, 50% win rate is phenomenal. Now you'll find that you'll start doing better than a 50% win rate. Let's say my win rate this week live is really, really good. I'm having a phenomenal week. I took all last week off, guys. All last week off. I took it all off from trading live because the week before had a couple of rough days. This week, I've been making wonderful decisions. Almost all of my trades have been at night. Made 10 points last night. So, did trade yesterday, did pretty well, but I still don't know which way I should be trading right now. I'm not sure. Because we're not in a trend. One move up, 2 candles don't make a trend. So what if somebody wanted to go short here, Travis? And they can clear that wick.
Well, it is a turnaround off the 200. If they can clear that wick, I don't mind that at all. That's going to be a very large strategy, though. That's a bigger wick than it might look like. So average candle right now between 8 and 9 points. My first thought is 12.8. So if I could,
why don't we build our trade from our stop? So put a line where you want your stop, and let's count down from there. And this is assuming we're going short, folks.
So let's do that. My stop 39.20. Maybe I wanted it at 21 or so, just a half point above it. So I'll do it with the paint. 21 would be my stop if I got in. So from there, if it's a 12.8 from 21, then I'm at 13 as an entry. That's asking for a lot in terms of how far I would ask it to come back. So the next trade up, maybe 15.10. Above that, you might look, shoot, it's tough to say at that point. 18.12 maybe, start to get into some U.S. history. And those are some big strategies that might take a sample size. So we got stopped out of our trailer here. Awesome. I'm happy with that. We gave it 10 points to kind of breathe up there, and now it's turned around at the 200, and the overall sentiment's down. So if it comes all the way back, I'll be back in an OB range trade. But if that doesn't happen, then I'm probably sitting on my hands until we see a trend.
Yep. And that's okay, folks, to sit on your hands. Wait for something that's obvious. Right now, I don't see anything that's obvious. We've had one move up. What's a trend? Well, an uptrend is a higher high, a higher low, and a higher high. Since opening bell, we've had one higher high. We're developing a higher low right now. So now we have to wait. Now, somebody said, I want to go ahead and get in a trade long because we've made a higher high. What we call this is a first retracement trade. I'd say as long as you have a turnaround at a key level, confirmation of a turnaround, that I would say, okay, fine. Know where you need to clear your stop, and go ahead and go for it. Give it a shot.
Come on.
Order filled.
Oh, we're in.
Oh, kiss me. Didn't get me in.
Well, I'm right above the, I like my entry just above it. So I'm in at 92.50. Because the re-entry usually only comes right at it or a point above.
Yeah, I'm right on it. So I should probably get in here, though. It'll probably work for me. And if it blows through that and stops me out, that's fine. I only have a 2-point stop on this trade. There we go. I'm in now.
Man, nice.
And then if it blows through, then it's going to pick me up on the bottom side, too. So I'll get stopped out. I'll get stopped out at a 2-point stop loss. I mean, no big deal. At 4 contracts. I'm in the same trade. So does anybody have questions? Anybody in chat? Type in chat. You can get on the mic. Whatever you want.
Morning, everybody.
Hey, Titus, what's going on, buddy?
When I was looking at the 15, we turned around right there off the 89. So that's just like we did on the 200 on the 5.
Yep.
I'm in short out the bottom, and I'm out.
Yep.
So that's something I'm still kind of working on.
Well, remember, this is a trade where you're expecting to win this about 25 to 30% of the time, most of the time. Somewhere right around there. But the key is when you win big. When you lose really small. So you have to have that mentality of, if you have 100% win rate mentality, then you're going to do really poorly, and you're going to get you can't handle this mentally doing this. It only takes 1 or 2 trades like we had yesterday for you to make your whole week.
Right. As long as you know when to not get chopped too hard. I agree with that.
Yep.
So my orders are back on the top and bottom, and I'm trying to again, build a sample size around a repeatable pattern. Are there factors that I'm missing in this? Are there things that I want to change into the future? Well, I can't tell that from any single trade. So we're
It's
in
going to
out
take
the bottom.
hundreds. It's going to take hundreds,
Yeah.
thousands of trades to. So I'm in too short. And we're going to, our first pay line's at 4
We just
points. So
hit
boom,
mine.
got our
Yep.
first pay line. Now we're looking for 8 points on our second contract. And me personally, once I hit that second contract, I move my stop up. So the worst I could do is take 4 on my first contract, 8 on my second, and then my final 2 contracts, I'll take a point each. And here we go.
I like that. So my first 2 are at 4, and then I have 1 at 9 and 1 as a runner. I like
you go.
scaling out of the first 2 because I realize how much we bounce back and forth between that first 4-point fill. I like taking advantage of that over and over. So you'll see I hit my fill and I have a re-entry order back at the
How many
OB
contracts
range.
on your reorder? 2?
2. So
Got
I'll
it.
be back in my full position. If I've been getting chopped up, I have to scale that down eventually. I can't continue to just chase the big trade, if you will. So that's something I'm working on, really defining those rules to a T and saying, when do I scale down to 3 and then 2 contracts?
So the first level I'm looking at to go short is going to be here, right? And that's my first spot. I want to break that. If I don't break that, then I feel like I could just be chopping back and forth and it might be a tough time to trade. That's the first level I want to break, is that red line I just drew. Maybe scrunch your charts up a little bit, Travis.
Sure.
Let's see what's below that. It's just to see, or no, I'm sorry, the other way. Yeah, just to see what's below that so we can see if the price does continue to drop. Remember, we're trying to develop a plan. So once it gets below that, then my next level is what? Well, there's our level right there. So these would be the levels I'd be trading to right now.
And we just hit our 9. So we hit our 4, 4, 9 out the bottom, which means Rob's hit his 8.
I hit my 8.
So I'm 3/4 of the way there. I could move my stop. I'm going to leave it right now. This is a time where sometimes I will, sometimes I won't. I'd like us to break through that level, and then I'll definitely move it down. But
so I've scaled out of 2 contracts, 4-contract trade, scaled out of my first one at 4 points, my second one at 8. Now I've got my third one on, and we're looking for 12 out of that. Once I make 12 out of that, then I'll have to decide, do I want to try and just go for my 16 points? Or, because remember, we won't make a lower low. If I make 12 points, my 12-point fill is at 38.75. Okay? It's not, so that would not make a lower low. So then I have to decide, if it does go below that, my 16-point fill is going to be at what? Well, 75 plus 4 or minus 4 would be 71. So I have to decide, do I want to go ahead and take 16 points on my final contract, or do I want to put a runner in? This is the part that you have to decide as a trader. Do you want to take your 4-contract trade and scale out and make 4 points, 8 points, 12 points, and 16 points on each scaling out? Or do I want to do a runner that can go, maybe if it gets below 55, we could have a big run down? That's what you have to decide as a trader. We can't decide that for you. So Travis did a great job going out the top side, making 10, 4, 8, right?
it was 4, 4,
18?
9, and 10. You're right.
4, 4, 9, and 10. There you go.
So out
Very,
the top,
very nice trade going at a time. Okay, folks, we just got our 12 points going out the bottom. So on my 4-contract trade, I made 4 points on my first contract. I made 8 points on my second. I made 12 on my third. And we only got chopped up once today. So we only took one trade that stopped us out. And that's really only because I was late. I should have got in one. I should have gotten the same one Travis did. But so now I did go ahead. I probably shouldn't do this, but I went ahead and put a runner in. I'm going to go ahead and get it below 55 and see if we can break 55 and have a runner.
See, if you set your target based on the last low, bodies to wicks area, we've wicked almost to the quarter tick off of it. So if you were thinking headroom in a trade, wanted to fill before then, you did pretty well.
Yep.
I like that I scaled out before then. If we break through that, that's when I'll start to trail my stop, knowing that we're under that key level.
Yep. So I got out of 3 of my contracts. Before we got, right at when we got, I got out of my 4th contract at, what I say, 38.75. So I got out of my 3rd contract at 38.75. Now I have one more on. Now, this would not shock me to see this go back up and get into a chop zone, folks. Would not shock me at all. So this is kind of where you have to be careful trading, because we could be in a chop zone here to where we're just going to be chopping back and forth. Now, what about going long here, Travis, with position? And if you could clear your stop, if we have a turnaround, at the bottom here, I don't really see a key level. It's a key level from, an hour ago, but is it a key level overall?
I'm weary of this long trade. If I was to go long, I would want confirmation of a turnaround at this bigger level, thinking that long I'm against the trend, so I want to have a little more factors than just a little turnaround, if you will.
Yeah.
I know that from a larger standpoint, we've turned around at this bottom 55 level twice exactly at that point.
Yeah.
So if we get a turnaround there, that'll be a risk management type trade where I'm definitely going to scale out based on my stop.
Agreed.
So I'm not long unless we go all the way back to the last lower low and we show a clean turnaround there. Just because it gets there doesn't mean it has to go back up. We've retraced steeply to the 200 and are running down from it. That is a perfect situation where speedy trends happen from. So I don't want to jump in the way of a moving train and say it has to go back up. So I'm really weary about a long trade, knowing that the
Agreed.
weekly's down, the daily's down, the 240's down, all my longer charts stay down, and my 5-minute had a quick retracement to the 200 and then a sharp down from that.
So you could almost say, in my opinion, this is my opinion, folks, is that I should only be looking for a trade in one direction. And all my charts, we OODA looped all the charts, and all the charts said short. So I am not even looking for a trade long until we get above some of those levels we talked about. We have not gotten above those levels yet, not even close. So I am not looking long.
I don't like it.
Not going to do it. Wouldn't be prudent. Not going to do it. Wouldn't be prudent.
I go move my gain out of the way down here. You never know if we catch some emotion.
Yeah.
I like to, that's my runner, right? So I don't expect to get whatever's there. I just want it out of the way to see what my stop can do at any point. If I want to squeeze that stop, I'm fitting my rules. So again, we did hit our 3 scale outs. As long as I get more than 4 or 5 points, I'm happy with this trade. If I get so scared of this key level after 10 minutes of going sideways, I say, you know what? I don't want to lose on this trade and take 4 points out of it. I still have to walk away knowing that I did good as far as my risk management is concerned. Do I like a little more? Yes, but I can't get so caught up on needing 50 points that I lose 3 every time. So there's a thought. I will be back in at 86.25 with only 2 because we hit our 9. That's something I'm trying to clarify. Do I want 2 or 3 there? Well, we're in 2. I get scared when it runs all the way back from 10 points down, but maybe I shouldn't.
Yeah, no, I got out of mine on the final contract. It got me out because I had moved it positive. So, and that's fine. Now I'll look for another spot to go short at the opening range. If it comes back up, almost got me, came within a quarter point. So
I'm back in.
You did use that extra quarter point.
I do.
Yeah. Now we're back in and we just got chopped. Yep. And that's okay, folks. Now, what this is telling me now is we might be in a chop zone. We might be chopping, folks. We might be going back and forth within a range, maybe from 3,900 down to 38.75, somewhere in there, going back and forth. Let's see if we get out of the top of the opening range. I think that'll be the key thing. If we get back out of the top, then we could be chopping. If we can use this as a key level right now, though, and go short, now we might be in a good spot to where this price turns around, and now we might be looking at a possible regular trade, right? Good, because we're at a key level. We did not make a lower low, though. So that's my only concern here. I don't know what the trend is.
Yeah, we turned right at the level of support.
Yeah. The overall trend, the big trend is down. But for a short-term trend, well, we have a higher high and a lower low, really, within the last 15 minutes. So I am not sure what I should be trading right now, if I should be going long or short.
I filled on my first one out the top again.
Oh, good job.
I don't know if you got back in up there.
Yeah, I missed it. So I just put one in so I can re-enter here.
Same.
A little hesitant on going long out of the top, but
I just have to
it's a little scary.
I agree.
It's a little scary.
But back in again, out the top. We'll see if it fills.
Yep. So I think we're going to be in a chop area for a little bit, folks. So me personally, I'm not going to be looking, to trade on the live until I get below 73, you know, get below that. I'm not looking to do anything. And going long, I don't even know I'm looking for a long trade today until I get above, well, I would say 39.30 would be my first mark. And once I get above 39.30, I might look to go long, but until then, I'm just not, it's not my trade. So we did make our, I did get into at the top. So we just hit our first contract.
I got
at 4
back in and
points.
filled again. Awesome.
Nice.
So just scaled back in off the same key level. I have another entry there off the top of the OV range. So as many times as it comes back to pick me up and moves forward, I'll make that 4 points on 2 contracts. That's my first scale out because I notice how often it goes back and forth right above that key level. I really like the idea of kind of stacking in. So out of that 4 contracts, 2 of them fill at 4 for me.
So anybody has questions, don't hesitate to ask. Haven't really been watching YouTube. I know we got some people watching YouTube, so let me take a look here.
Back in again, out the top. So this will be the 3rd time we've scaled into the same key level. With a 4-2 technically. So that trades out.
Order submitted.
Still got a couple people watching on YouTube, so cool enough. Now we're going to go out down the bottom. We did fill on a contract out the top.
Yep, I'm out the bottom too.
Boy, big wicks, folks. Got to be real careful. So be a little careful here. Again, I don't know what direction to trade just yet. My bias is definitely short. But I really want to get confirmation of that.
Order canceled.
I just put a buy order instead of a sell on my trade, and it picked up perfectly and ran down. I just closed the whole thing to start over because it kind of skewed me. I tried to be quick and change my limit order to a market order, and I clicked buy stop market instead of sell. That's so frustrating to me, but
Yeah, I'm in
what
short.
it is.
So
I should be.
yeah.
It picked up my order, but oh my goodness, oh well. Execution problem. Yeah. What I did was I right clicked and tried to hurry up down to sell, and I hit buy. So we'll see if it'll come get me.
Order submitted.
All right, so we got our first contract at 4 points. But really, folks, we're just not really going anywhere now. Then we got stopped out of the other 3 just now on a flash up. So after a big move yesterday, a lot of times it doesn't surprise me when we get, we see that.
Yeah, that's emotion.
Yeah, we have a lot of battles going on right now, folks. So just, this is a spot where you just want to be really careful. Be really careful right now trading. We're seeing these 4 point, 5 point, just fast moves.
Order filled. Stop filled.
And out. We have existing home sales at 10 a.m. and that's right now too. So that could be part of this emotion. Should I be back in out the top? I probably should have had an order. It's tough to say. How long do I play that chop, if you will?
Order submitted.
Let's look at what that survey said.
Wow, this thing is bouncing around so fast, folks, that I got into a trade and I don't know what happened.
Same. It cleared my stops because I hit a market order.
Yeah.
And between the time that I sent the order and the market moved, it was on the other side of my entry, and it said it couldn't send me gains and stops because of that.
Because it moves so quick.
Right.
Yep. Same thing happened to me. So when I see that, everybody, that's a big red flag to me to like, okay, time to take a step back. Yeah, do have some fun, practice if you want. But the market's really just bouncing around right now, has not picked a direction it wants to continue in, which means what? We don't really have a solid trend right now. So this is an area that you can really get in a lot of trouble if you're not careful. So our goal here is not only just to help people get into trades, but it's also to help people to say, hey, look, price action is going a little nuts right now, and it's going sideways. We're not developing a good direction. So now's the time to just kind of take a step back and let the price action tell us what it wants to do.
So the home sales came in a little under the consensus, but still in the range, so it doesn't seem horrible, if you will. No guarantee that explains this price action. I mean, it's just a really choppy day, though. Feel like I should be in out the top right now, though. Oh well.
Canceled.
You have any other thoughts, any questions, anything you want to add?
Got a couple texts from people that are enjoying the YouTube stream. So good analysis. And that's all we're trying to do. Yeah, we're just trying to help people find their zones, you know.
One thing to keep in mind, the OB range that we're trading is very, very different than the foundational trade that we preach to a lot of our members, if you will, to where I was hesitant to even start learning anything. And this is a sample size to me still. So what you see is not a final way I trade as much as still learning a lot about the OB range. That's one of the newest things to a lot of people in our group. And the OB range, it's a pretty strong area. I'm starting to like it. Again, I was very resilient. It was like, I don't want to do that. That has nothing to do with everything I've learned over the last few years. It's like very, very different. So if it's not your cup of tea, then that's fine.
Yep.
I don't even know that it's mine yet. I'm still kind of sampling that one, if you will. I've had some very, very, I mean, right now I'm positive, and I think it will be. I'm very confident with the opening range. I'm excited about it. I've had some very good days with it, and it's something that I really just want to refine to the point that I do my thinking ahead of time, and I'm not asking, okay, do I put back on 2 or 3 contracts, or do I scale in or not this time? Do I have my order out the top this time, or do I wait on it to get out the top and retest? Like, there's all these little details that might not be thought about the first time. So I'm learning as much as anyone else is.
Well, and the cool thing is we don't have just you doing it, right? We have we have Titus, we have Randy, we have a variety of people that are testing this opening range, and it's something that's been around for 100 years.
Right, agreed. I don't say
new. Yeah.
I don't say me like, okay, listen to me once I get it. Like you're saying, I mean, the whole point of our group is to be able to share what each other think and try something, and not necessarily be loose cannons, but say, look, I'm going to try and figure this out. And if it works, I'll tell you how I'm doing it from a repeatable standpoint. Like we talked about earlier, if the same thing happened tomorrow, would you take the same trades? So pretty cool. Like you're saying, Rob, again, I'm not captain, if you will, of anything in the OB range category. It's just we're all learning, and it's really cool.
Learning. Hey, if you will be a student of trading for your life. If you're not willing to be a student of trading for life, then just quit now. I know, like
market's always changing.
Sorry, folks. Sorry, I don't mean to be a little, you know. I hope that doesn't come across as rude, but the market never stays the same. Now, what you need to do as a trader is identify if you're not doing well for one reason or another. You need to ask yourself 3 questions. Is it the market? Like, is it super volatile? Is it the strategy that you're using? Or is it me? Is it the market? Is it me? Or is it my strategy? Because it's one of those, sometimes 2 of them. But if you're not willing to be a student and continually learn, continually grow as a trader, then I wouldn't recommend continuing trading. That's just my personal recommendation. Now, the cool thing about FNL is we can all learn and study and grow together. And I'm not saying you got to sit here and do this for 70 hours a week. Spend 4 or 5 hours a week studying, taking trades, being on your simulator, getting in session, asking questions, having trades reviewed, getting feedback from other members.
Trading was a much less direct journey than a lot of other learning situations in life, I guess you could say, where a lot of other things, I mean, it's almost like an alphabet. You learn A, then you learn B, then you learn C. By the time you get close to Z, you're done. You got it. That's what you needed to learn, and now you can do that every time. And with trading, it feels like, I mean, you make it halfway and you're back at B or C again because, wow, what I was doing isn't working, and I thought I was doing so well, and now I'm not. So I like to talk about my trading journey like a roller coaster. There's those highs and lows, but overall, I like to be in an uptrend. Roller coaster uptrend, like a lightning bolt, if you will. We're making new gains and new losses. But an underlying point that I want to make there is that some days you will have aha moments, but the majority of your trading days, whether you're on sim, playbacks, whatever it might be, you don't necessarily walk away like, wow, I learned so much today. I am so much better a trader than I was yesterday, and I just got it now. I mean, it sounds funny, but you don't feel like you're making much progress. It's like, okay, here we go, playbacks again. But what I like to say is if you look back 6 months or a year of time, there's no doubt that you read that market better than you did 6 months ago.
Travis, since we've been OODA looping charts, and it started really with Travis did his morning show, and Jeff Brown and I were OODA looping charts. We started about 6 months ago, 7 months ago. That's really when I started seeing the charts a little differently, because now I started focusing on these longer time frames. And Jeff Brown will probably be back. I mean, he will be, and he comes in the afternoons and does the closing day trade and all that. But he's going through some things personally. So Travis now is he and I are doing opening bell, and that has been the biggest change in my trading and how I'm seeing levels and how I'm trading level to level. That has changed my trading more than anything in terms of me growing as a trader, is not staring at, banging my head on a tree on a 5-minute chart. And that's all I look at. I have to now look at my daily, my 240, my 60 or my 30, my 15 before I execute on my 5-minute chart. If I don't do that, I don't feel like I have a whole picture of what the market may want to do in terms of going up or down. Or sideways.
Today's a perfect example of that, where if you're honed in on your 5-minute, you're like, man, look at this uptrend today. We're going to kill it in this uptrend today. And we'll go to a bigger chart for the sake of it, but even shrinking the 5-minute is like, what uptrend? I mean, that's a retracement. So like Rob's saying, you go over to your 15, your 60, you start looking at the bigger time frames. It's like, what uptrend? I'm on a 240. It's like, I couldn't convince anyone we're in an uptrend on this chart. Yep. Not a single trader in the room is going to say, yeah, that's a clean uptrend. I love it. Maybe they recognize these are 4-hour candles. We've been going up overall for 8 hours. But if you look at the overall pattern of this trend, this is lower lows and lower highs all over it, all the way down. And that's what Rob's kind of talking about, is the forest for the trees. I think it's really easy on a 5-minute to see this in the morning. Let me back up to our little zoned in on the charts. It's really easy to see this and get so caught up long that you're like, man, we got to go long today, and you stop out long again, and every time it comes down you're like, this is the uptrend of the century, when in reality the 5-minute is retracing what could be a great downtrend on other charts. So
see how that 202 has been so huge this morning? Look at that. We just cannot seem to get above the 200 moving average.
That's a good sign for down.
That's a very good sign for down. Yeah. So if you guys don't have a 200 moving average on your chart, I would highly recommend you put it on there. And you don't have to trade off it, but just start getting some situational awareness of the 200 moving average and how price reacts to it. That's all.
Agreed. So
that's all.
Yep. My own rule of thumb there, the 200 moving average is my last line of defense for retracement in a downtrend. So like in this case, you could see how we ran down rather quickly, and then we had a deep retracement. Well, as long as we don't stay above this 200, I'm still thinking downtrend. I might be trading against it. Well, actually, hold up. We might have a trade here.
Big stop.
My stop? Yeah, but where's it clear at? Let's look. 12.8. 8 points up at 13 puts me around 15, or no, 05, sorry.
Yeah.
15, wrong direction. I could do that.
I just don't see, I mean, it hasn't given me clear direction on which way to trade. I would say positionally, I'd rather go short, but still, I just don't see a good trend yet for me personally. Now, it would be a good trade to take, I would say, yeah, on your sim, but in terms of live, with my live account, I'm just not convinced on which direction I should be trading just yet. My bias is short for sure, but I need to see the price either move up and get above the 200, get above that level. Actually, the level, you know, at 30, I don't know where we're at now, 39.20, or even up to 39.30, really 39.30. Once we get above that, then I'll feel a lot more confident to go long. And you have a level right there. So that's it. That's the level I'm looking at to get above. Once I get above that, now I might consider going, okay, let's go ahead and go long, because I feel like we have a trend developed. I still don't feel like we don't have a trend developed yet.
No, I agree.
Little
It's
tough.
scary. We didn't make a
scary right
lower
now.
low before this retracement. I'd much rather have seen this run all the way to a new low and then retrace that far, because then it looks more like a deep retracement than an uptrend. So we've got a pretty clean, like, both directions right now, but we do have a double bar off of 200 in the direction of the trend with the headroom to fill. So even though I doubt the trend a little bit, we do have a turnaround at the 200. I took a P12 S8 short. I will extend one contract because all of the larger charts tell me short. So knowing that, I'm going to use one contract to try and extend my gain on this trade. But if we go 12 points positive, I will scale out 3 out of 4 contracts.
Yes.
So a heavy scale out on that, knowing that the trend's a little bit of a question mark. That's what my risk management tells me. But if we do take off down, a quarter of my trade will be able to take advantage of that. Now, why, if I think it's going down, don't I put all of my contracts way down at the negative Jupiter, negative moon, if you will? Well, the reason being, go ahead.
We haven't broke that level yet.
Not only that, it's very difficult to choose spots on the market that from a reasonable stop, the market goes 40 points, and that's your PNS. So my goal is to not have to hang on to that trade all the way down, but to be able to scale out on the way and say, as long as it's going my way, I'm going to be profitable. I'm not going to give it all back because I'm so dead set on making a 100-point gain that I can't take profit out of a good move. So from my 8-point stop here, if it goes 12 points, that is great on risk management. Let's talk about risk management. S over P plus S is my break even, again, profit and stop, right? So my break even on this P12 S8 tells me that 8 divided by 12 plus 8 is 20. Is what? 4/10 is 2/5 is 40%. I about just wrote 40%, but you can do that on a calculator if you'd like to. Again, that's my break even. So my target is not to be a break even trader, but to be a profitable trader. What would my target be? Roughly 10% above that. So my target with a P12 S8, like we said earlier, 50%. If I just win half of these trades, I cover commission and make all the points money I ever need if I can do it consistently. So it's not the number of points. It's not, oh, well, you're only plus 6 points today and other dude made 24. Yeah, but the dude who made 24 points today might be trading like a maniac and lose 34 points the next day. Whereas if you could consistently make 4 points, maybe just every day, even just 1 point a day. If somebody told me without a doubt I could take one trade and make 1 point a week and never take another trade, I would never take another trade. I would just let my account grow over time until it stacked up to what I needed it to be. So the point I'm trying to make is don't get caught up when you hear somebody say, oh, I made 30 points today and think, man, I need to overtrade. Because if you consistently can make 3 or 4 or 5 points a week, I know a lot of us were brought up 5 to 10 points a week. That's all you need. And some people doubt that. They think, wow, I don't think that's enough. And in reality, if you scale up in contracts, it's all you'll ever need. So a big shift in my trading has been to aim at the 50+% or to aim at good decisions more than I aim at making money. We missed our fill there by maybe a couple points. I thought it was about to hit, but we're committed in this trade.
You're still all right.
It yet.
Yeah, you're still good. You're still good. You know, and from what I found now, Travis, is when I can get those bigger trades, they just come naturally. I don't force them. I see them. I see the levels. I see it breaking levels, and I'm able to capture. Usually only on one contract, right? Unless I can scale in. I have a level that it pulls back to, and I can get in another contract. But here's the key: I don't force it. I just let it come to me. When it happens, it happens. It doesn't happen every day. When I was trying to have that happen every day, I was finding out that, man, I'm not doing as good as I thought I was. I wasn't doing as good as I thought I was. But then when I start seeing these bigger moves and I'm a part of it, that's when my account starts really growing. So again, it goes back to, remember, we've talked about this before, win small, lose small, win small, lose small, win small, lose small. And I don't like to use, win and lose. I like to use profit and expense. So, profit,
Right,
big,
because
yeah. So have that 50-50, grind those trades, and then identify when you can get in a bigger trade and take advantage of it. Now, at first, it's going to be hard to identify when do I do that. Well, the more you practice it, the more you draw the levels. That's the key, having the levels, knowing what to trade to. That's how you start getting those bigger trades, those 30-point trades, those 20-point trades, those 50-point trades. 71-point trade yesterday.
nice.
Down. And that's only because of the levels. We kept breaking levels yesterday, so I had the confidence to keep a trade in.
Yeah, and yesterday was one of those rare birds, if you will, that never really had a deep pullback. Just kept on keeping on. So pretty cool to see.
All right, so why don't we? We're going to shut down the YouTube, guys. Thanks everybody for coming out. YouTube listeners, of course, members, hang out. We'll continue to keep trading, look for spots to get in. But again, thanks everybody for coming out. Travis, thank you. Great job this morning.
Yeah, thank you, Rob. Thank you all for hanging out. Always a good time.
Yep. All right, we'll see you guys soon. We'll be back tomorrow. By the way, we are always going to live stream on Fridays. We have Sim Millions tomorrow as well. So folks, come on out and play Sim Millions, man. A lot of fun, little trading competition. So we'll see you guys tomorrow.
We should stream that one. Maybe not tomorrow, but another time. Just surprise some viewers and be like, hey, y'all want to watch us play Sim Millions one day? Let's do it. Because that is a really fun in-house tournament that we do for our own members that... I mean, it's just 2 hours of trading. Very, very simple rule set where you can only trade one contract. You have to stay in your trade for 10 minutes, which requires people to trust their decision. So even if that's not how you trade over time, even me, I see it as a great exercise to say, where do I trust these positions? Where can I sit in a trade for 10 minutes and really trust the trend and turnaround?